Welcome to the Business Finance Bulletin, episode 165. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, the election, what now for small businesses, tackling rising costs, and short-term cash flow funding. Well, as I record this, I can't fail but to mention the news that here in the UK we are now facing another election on the 8th of June 2017. Yes, the third summer in a row when we're going to be bombarded on the news with promises of support and help by the existing government and prospective governments. And it's going to be interesting times. Now, what does that mean for small businesses and for you? Well, first of all, let's look at the access to finance, getting finance generally. Well, lenders, of course, don't switch off the taps during times like this, but there's clear evidence already coming through that we're seeing with the lenders that we talk to on a regular basis. They're asking a lot more questions, being a lot more cautious, as you would expect, but certainly the tap is not going to be closed off. As I've mentioned in previous bulletins, there's signs coming through that business owners themselves have a waning appetite for borrowing, and so in this current climate it may be even more of a reason during this period of uncertainty why small businesses like you don't wish to borrow. And I guess that links also then to the consumer side of it. As we know, with any period of uncertainty, human psychology is that I will delay a buy-in decision until I'm more certain where I stand. Even though they still may need that particular product or service, it's just an excuse. And an election does put a stutter in the system when it comes to the buying decision. So we could see a tail off in demand and a tempering of confidence over the next couple of months until we get over the election period. But then, of course, we're going to be well into July or August by then, so it could be until September till we see some real activity coming through again, subject to what happens with Brexit, of course. So interesting times ahead. The key message, though, is keep on marketing. The temptation is to switch off your marketing budget during times like this, but you cannot afford to do that because you lose momentum, and while your competitors are still out there getting their message across, you're going to be on the back foot when spending starts to increase again. So keep getting out there and marketing your business. If you do need some help and support on that finance generally, don't forget we're always here for a chat. Just drop us a line, info@businessloanservices.co.uk. So interesting times ahead. As we know, inflation is now starting to creep up, and it's clear that many businesses are now facing rising costs. Well, these are findings that are coming out now regularly in the latest batch of surveys coming out. The latest one from Hitachi Capital Business Finance, part of their Business Barometer survey series, has identified that of those businesses looking to grow, there are three top priorities. 39% of the business said their number one priority is to control their fixed costs. Secondly, 27% of them say they're looking to hire more people, which is always great news, and 25% of them said they're actively looking for new markets. So it's the top priority one I want to focus on, which is managing costs. It's clear with inflation starting to coming through, businesses are now faced with a dilemma. I've got increased supplier costs, but do I pass this on to my client, or do I just take the hit, keep my prices the same and just swallow it? Well, of course, that is a tough decision to make. It hits your margins and hits your profit. This problem of rising costs has also come out in the latest Small Business Index survey from the Federation of Small Businesses. They found amongst their members, 64% of them have said they have seen an increase in their operating costs over the last quarter. Well, what can you do? Well, obviously not passing on prices, it is an option, but you can only manage that for so long before it really does hit your margins and your profit. You're really going to have to bite the bullet eventually. So number one strategy is, at what point can you pass on the price increase to your clients? Secondly, review your cost base. Sit down, go through your bank statements and all your invoices and ask that also important question: do I really need this cost? What value is it giving to me through the business? Are there some costs that are seeping through, they're on direct debit or standing order, and they become invisible to you? Really take a knife to that and slash that out. And the third strategy, of course, is to renegotiate terms with your suppliers. They want to keep your business just as much as you want to buy from them. So have an honest conversation. Love to do more business with you, want to buy more from you. The market is getting tough. What can you do to better your price so I can continue doing business with you? So don't be one of those businesses sitting back, and sweating about increased costs. Do something about it. Be proactive. Take a knife and slash those costs back and really be aggressive with your suppliers. As we know, when it comes to access to finance, what small business owners want is a quick, rapid response. Now, as we know, banks these days are not really geared up for that. So when it comes to a quick cash need, trying to get an overdraft facility is not as easy as it used to be. And of course, that has now left the marketplace open for new alternative lenders to come in and provide short-term cash and loan facilities. Now, here at BLS, we met one of those lenders this week called Yes Growth. We had a catch up with one of their representatives to understand their offering and what they can do for small business owners. Now, Yes Growth, they said, are in the short-term loan market and got a number of products. And the first one, which would probably be of interest to most small businesses, is a short-term loan repayable every month from 3 months up to a maximum of 12-month repayment period. You can apply from £50,000 up to £250,000. Interest is 1.5% per month, a 2% arrangement fee. No early repayment, but you have to be in for a minimum of 3 months and give 1 month's notice if you wish to repay early. And I said no penalties for doing that. You just pay interest up to the period that you exit. And so a very flexible and quick assessment process there. So if a deal comes and lands on your table that you need a very quick injection of cash, just go along and have a chat with Yes Growth. The next one, if you want to borrow more than £250,000, they also do a loan up to £1 million. That has to be secured against some assets within the business, and they'll also do loans £1 million plus as well. So some good options there. So if you have a very quick cash need, just check out Yes Growth, which is yesgrowth.com. Alternatively, pick up the phone to us or drop us an email, info@businessloanservices.co.uk, and we will happily guide you through the process and work out which is the best option for you. So great to see another player in the marketplace filling that gap for quick cash requirements. Well, that's it for another bulletin. Thanks very much for being with me. Don't forget, if you're on the video version, you can also download the podcast version, available on iTunes, SoundCloud and Stitcher. And if you are listening on the podcast version, just pop along to my YouTube channel. Go to YouTube and search for Rob Warlow. And there you will find this bulletin, other bulletins and a host of other videos all around raising finance and dealing with banks. Thanks so much for being with me. Look forward to being with you next time. Have a great, successful and profitable week. Bye-bye now.